Let's get more now on the market meltdown. Live to Tom Piotrowski at Commsec. Tom, what's the latest?
Well, Kieran, the latest is that we're looking at a particularly grim sell-off for the Australian share market today. It's the worst that we've seen since the global financial crisis, in fact, October 2008. And it's the collision of a couple of big issues, obviously. You know, the markets globally have been contending with the notion of slower global growth because of the coronavirus outbreak. But then what we've seen at the weekend with OPEC's response to the decision on the part of Russia not to join in an agreement to cut production has really taken the markets aback at a time when they're looking for guides on how the global economy is likely to move through this period of the coronavirus. So the price of oil is an important growth proxy. To see it fall by 10% on Friday, another 30% today, that was an unwelcome outcome to say the least. And the problem is we're just seeing these markets having a lot of trouble consolidating after steep falls over the course of the last couple of weeks. And the aggressive selling around the lows of the session today is not particularly encouraging.
And Tom, is it all about coronavirus? Is it all about the fear of that COVID-19?
No, it's not all about that. So it's a reflection of the fact that we're at a point now where the central banks around the world and governments are trying to do more to support their economies, but we're essentially dealing with something of an unknown in terms of where growth actually might land. And it's the market's speculating on that outcome, giving themselves enough of a buffer that's causing this volatility at present.
And the latest on the Aussie dollar, how's that holding up?
Okay, so that's another element that has created a lot of discomfort today, Kieran, is that in late morning trade we saw the Aussie dollar fall from just above 66 US cents to just above 64 US cents in a really short space of time. And that plunge in currency was another factor that just undermined the share market. It's come good in the last little while, but the recovery still hasn't meant that it's recovered all of its ground. But that steep fall has just been another element of instilling this caution in terms of investor behaviour at the moment.
And finally, Tom, is the only bright spot on the market in the typical sort of investor havens?
Yeah, gold stocks are amongst a handful of improvers at the moment, Kieran. So that's the counterpoint to what we're seeing with the energy producers. We've got Oil Search, for example, down by 30%, which is an extraordinary decline in a short space of time. So it's going to take a while for an equilibrium to establish itself where oil prices are concerned. And in the event that Russia comes back inside the tent with the OPEC and allied producers, and the group forms some sort of a consensus on oil prices, that would be quite a handy thing at this point in time.
Would indeed. Tom Piotrowski, appreciate the update. A busy day for you. Let's go live now to James Cullen, a former senior Labor advisor, now senior director for the Cornerstone Group. James, thanks. Does this bring back terrible memories, I guess, really, of the GFC? As Tom said there, the worst plunge on the ASX since the GFC, and you, as a former advisor, would have been there at the time when Labor was grappling with that.
Yes, Kieran. Look, thanks for having me. Absolutely. Unfortunately, that global economic instability is writ large, and we do see announcements from OPEC from time to time. They don't always necessarily cause this kind of instability, but when it's obviously laid on top of what we're already facing with the coronavirus, it's really, really concerning. And we're sort of seeing how different countries and how different regions are responding to that coronavirus, and we're seeing increases in the rate of infection, for example, in parts of Europe. We're just going to see the economic impact follow that. And of course, Australia is a bit of a price taker when it comes to these things. So we are seeing, unfortunately, with the ASX 200 down 6% today, that flowing through.
And we've seen it at the micro level in the shopping aisles with goods like toilet paper, and now we're seeing the panic. As you say, it really is panic writ large on the markets.
Yeah, look, I think it's look, to go back to 2008, 2009, where countries were facing this, it really is a time for governments to come forward and instill confidence, and we saw that today a little bit with the Treasurer making at his press conference and the statements he's been making about trying to reassure Australians, investors, families. Yeah, that's what we need at the time. We do need that sort of stable, consistent messaging that we've been in these sort of circumstances before, both with pandemics, obviously they're not quite as big as this, but with the GFC in the last 10 years, and governments working closely with all parts of the community can work through this. So those kind of stable messages do assist at the margins when we find this kind of panic, unfortunately, in markets and in our shopping aisles.
What do you make of the reports thus far? Andrew Clennell earlier this hour with a bit more detail on the stimulus. It's going to see basically cash injections to small and medium-sized business to provide wage subsidies. Is that the way to go right now in terms of an immediate stimulus?
Yeah, we saw an increase in training places as part of one of the Rudd government stimulus packages as well. And I think, to be fair, Treasury and Finance and the government would be looking at what worked and perhaps what didn't work so well with the previous stimulus packages. I think a wage subsidy, Kieran's really useful because we're talking about when businesses are faced with this kind of crunch, they're often looking at the more unproductive workers, which unfortunately can be the younger workers, the apprentice, the trainee. So a wage subsidy can actually help trying to keep those particular workers in the workforce. And the good thing for the government is there's well-established wage subsidy programs already in place. You don't have to reinvent the wheel. So if you can increase some of those retention payments, you can look at keeping some of those workers in the workforce, which is exactly what we need. I think the concern, though, is casual workers who don't have the sick leave. And if we're talking about self-isolation, those sorts of workers are out of the workforce for a few weeks. It's a question mark about how the government engages it. But we look to what's happening in the UK right now, and Boris Johnson's increased the statutory sick leave that can apply to those sorts of workers. There are examples out there the government should be looking to. Yeah.
And so what about the other ways to get immediate cash out there? We know that the coalition's been critical. Scott Morrison's been critical of the Rudd stimulus in large part because of the cash splash as it was described. But in terms of getting money out the door, that's the simplest, quickest way. What are the other options?
Yeah, look, similar to that, apart if you put aside the checks, and I think probably the government's not going to go down that path given the, as you say, the strong political rhetoric they've used over the last 10 years. Again, the first Rudd government stimulus did increase payments for certain classes of social security recipients. Carers and pensioners, there was an aspect straight away. We're talking about a meeting of the economic and social policy objectives here. If you were to look at some sort of temporary or one-off increase in some of those payments, carers payments, New Start, for example, the pension, just a temporary increase, we know because of the sorts of people we're talking about who are generally closer to the poverty line and they're more hand to mouth, they're more likely to go out and spend any of those increases right away, which could boost the domestic economy and retail trade, to be frank. Those things which have been really struggling when it comes to recent national accounts.
And finally, James, if you look at this in a broader political sense, obviously we have to consider those implications as well right now. And the government had been promising a surplus. That's gone by the wayside. Really, the concern now is the R word and avoiding a recession.
Yeah, this is right. And this is really when it comes down to what does Treasury think is going to happen in the June quarter. I think the expectation now is we'll see a negative growth number in the March quarter. And of course, we know we need 2 negative quarters for a technical recession. What does Treasury think that negative impact of the coronavirus is going to be in the June quarter? And what's required from the government to basically increase demand and help with supply to offset that? I think that's really the objective and the test the government needs to meet, and Australians will be looking forward to it. And I think probably Labor will be pointing to their record during the GFC and keeping people in work and keeping the economy out of recession. That'll be the test that they're applying to the government in the next few months.
High stakes on the economy and on the politics right now. James Cullen, former Senior Labor Advisor and now Senior Director for Cornerstone Group. Thanks so much. Talk to you soon.